If you're watching this, you're probably caught in the great American housing trap. On one side, rents are still sky high, draining your savings every month. On the other, buying a home feels like trying to climb Mount Everest in flip-flops. You see the news. Housing inventory is up. But then you look at those mortgage rates, and that dream home instantly becomes a nightmare. For years, we waited for 3% mortgages to come back. We waited for a housing crash. We waited, and we waited. And while we waited, something fundamentally shifted. In February 2026, the data is undeniable. That old idea of affordable is dead. We're now stuck in a $600 a month gap where owning seems impossible. But what if I told you that the market isn't going to crash and 3% isn't coming back? What if I told you that the current 5.9% mortgage rate isn't a problem, it's actually the biggest opportunity you'll get in 2026? Today, I'm going to show you why you need to stop waiting, embrace the new normal, and unlock the strategies that will finally get you into a home, even if you think it's impossible. This is the real estate reset, and it's time to get ahead of it. Let's confront the elephant in the room, the wait-and-see trap. For the past 2 years, millions of aspiring homeowners, and even current homeowners looking to move, have been paralyzed by the hope that mortgage rates would return to the ultra-low 3% we saw during the pandemic. We've been told, just wait, rates will drop and prices will crash. Well, here's the cold, hard truth for February 2026. 3% isn't coming back, not for a very, very long time. And anyone telling you otherwise is either misinformed or trying to sell you something. The Federal Reserve, under its new leadership, is committed to balance sheet normalization. This means the era of cheap money is over. We are now in a new normal where 5.5% to 6.5% mortgage rates are here to stay. This isn't a temporary blip. It's a structural shift in our economy. Now, let's talk about the real problem: inventory. While headlines boast about inventory being up 13% nationally, that's a misleading statistic. What's actually happening is a spring reset where new construction is coming online, but it's concentrated. Cities like Phoenix, Austin, and parts of Florida are seeing more homes, but many established high-demand markets like California and the Northeast are still starved for listings. This creates a paradox. If you're in a market with low inventory, prices aren't crashing because there's still demand. If you're in a market with high inventory, rates are still making homes feel unaffordable. This is why the $600 monthly gap between renting and owning has become so pronounced. For the average American, paying $2,000 for rent might feel painful, but a $2,600 mortgage payment on the same property is just out of reach due to interest. The biggest mistake you can make right now is sitting on the sidelines hoping for a market crash. Why? Because the supply issue is so severe, any significant drop in rates would unleash a flood of buyers who have been waiting, instantly driving prices back up. You'd be trading lower rates for higher prices, effectively ending up in the same financial position. The only way to win in 2026 is to understand the new normal and act strategically within it. This means leveraging the current stability in rates, even if they're higher than we'd like, before the competition heats up again. So, if 3% is a fantasy and a crash isn't coming, how do we actually buy a house in 2026? We embrace the new gold standard, the 5.9% mortgage. Why 5.9%? Because it's where the market has found its equilibrium. It's the point where enough people can afford to buy, but not so many that it creates a bidding war frenzy. This rate isn't perfect, but it's stable, and stability is your most valuable asset in an unpredictable market. Here's why 5.9% is your opportunity. Reduced competition for now. The high rates have scared off the hobbyist buyers and the casual investors. The serious buyers, like you, now have a chance to actually negotiate. You might even see seller concessions, like covering closing costs, which were unheard of 2 years ago.
the spring reset of inventory. While overall inventory is still low, we're seeing new construction homes finally coming to market, particularly in suburban and ex-urban areas. These are easier to purchase without bidding wars. Look for areas with active new home developments. The 2026 rule changes for first-time buyers. This is massive. The government, realizing the crisis, has quietly rolled out rule changes for first-time buyers. These include more flexible debt-to-income ratios for those with strong rental payment history and expanded down payment assistance programs that don't require repayment until you sell the home. Many people don't even know these exist. You need to ask your lender specifically about the 2026 First-Time Buyer Boost. The future of refinancing. This is the secret weapon of the 5.9 strategy. If rates do drop, say to 4.5% or 5% in 3 to 5 years, you can always refinance. But you can't refinance a house you don't own. The goal is to get into the market now with a stable payment, build equity, and then optimize your rate later. Think of it as buying the house, then buying the rate. Let's do the math. A $400,000 mortgage at 5.9% is roughly $2,385 a month. Yes, that's higher than the 3% dream. But if you wait for 3%, that same house might be $450,000 due to inflation and renewed demand, costing you nearly the same monthly payment with less equity built up. The key is to stop comparing to the past and start making smart decisions for your future. The 5.9% mortgage isn't just a number, it's your invitation back into the American dream. Okay, so you're ready to stop waiting and embrace the 5.9 opportunity, but how do you actually find that home in your market? Here's your 2026 action plan. Go hyper-local, hyper-specific. Forget national headlines. Use tools like PropStream or even your local MLS through a top agent to find actual inventory in your specific zip code. Look for properties that have been on the market for 30-plus days. Those are your negotiation opportunities. Don't dismiss the ugly ducklings. A little paint and elbow grease can unlock massive equity. Leverage your rent history. This is a game changer. New 2026 mortgage rules now allow lenders to use your consistent rent payment history as a positive factor in your credit score and debt-to-income ratio, even if you have a thin credit file. Make sure your lender knows to check this. It can open doors that were previously closed. Explore creative financing. Assumable mortgages. If a seller has a low-interest VA or FHA loan, you might be able to assume their loan. This is rare, but a gold mine. Ask your agent. Seller financing. With rates at 5.9%, some sellers might be willing to offer a seller carryback or owner financing for a portion of the loan to make their property more attractive. 2-1 buy-downs. Some builders or sellers are offering 2-1 buy-downs where they pay to reduce your interest rate for the first 2 years, like 3.9% year 1, 4.9% year 2, then 5.9%. This gives you breathing room. Look for house hacking opportunities. This is how Gen Z is entering the market. Can you buy a duplex and rent out one side? Can you get a home with an ADU, an accessory dwelling unit that you can rent for extra income? This income offsets your mortgage and makes higher rates manageable. Build your team. You need a proactive, tech-savvy realtor who understands these new rules and is hungry. You need a lender who knows about the 2026 first-time buyer programs and rent history options. And you need a home inspector who isn't afraid to find those ugly duckling opportunities. The 2026 housing market is a puzzle, but it's solvable. Stop waiting for the market to come to you. Go to the market. Embrace the 5.9 opportunity. Get smart, get strategic, and get those keys. The time is now. If you're ready to stop renting and finally buy your home in 2026, hit that subscribe button and join the Dishku investing community. I've linked my recommended lenders and realtors who understand these strategies in the description below. What's your biggest challenge buying a home? Let me know in the comments.